Hi there, traders. This is Brad Gilbert with the FX Market Insight for Tuesday, the 23rd of March. All right, now let's just look at the dollar now. Pretty much sideways sort of trading. If anything, a little drift lower in the dollar index. And it's pretty easy to sort of follow what's going on. It's the same pattern we've seen for the last few weeks. Now, treasuries, US treasuries, still up there, but they are slightly lower than where they were yesterday. Now, it's very rare to see this yield curve like roll over quickly. So if anything, like most instruments, they don't just go up and down in a straight line. So, and the dollar is just fluctuating around that. The volatility index, well, it's first time in a long time it's been down in the 18. So that tells me that the market is very comfortable with everything globally at the moment. And the equity markets themselves, they can see what's happening with the treasuries. And on those equity markets, NASDAQ up 1.7%. It's the main sort of catalyst at this point. So that's where we are with the major currency pairs. And those equities, the moves are coming directly from movements in those treasuries, okay? Now, does that flow into the rest of the pairs? Well, as I was saying, it hasn't been a big move. If anything, the dollar pairs just dribbled down a touch, and the other pairs, well, they're up a touch. Euro had a pretty good run, but it's not exactly trend-setting stuff. All right, let's just have a look at the majors while we're here. And this is right. You come through that North American session on Monday. It's time to really fine-tune your charts and adjust the charts accordingly. To me, the dollar index has got that new high. Sit that there. Same with dollar Swiss. Now, there's no need to move that support line at the bottom because it's already just broken down through there. If anything, I'm not going to do much with dollar yen either, right? Otherwise, all you're going to end up doing is every day just moving into the new low, right? So if anything, this thing is now officially just drifting sideways without too much worry in the world. Dollar CAD, it's had a bit of an odd run, right? Because we've had some, oil was moving up, and then we also had a lot of strong Canadian data. Oil's banging back to $61. It's trading sideways, and some of the inflation numbers weren't that awesome either. So dollar CAD really looks like it's found fair value around 125. It's still tracking around that resistance level. I mean, you could move this line. You can actually get rid of that one. Let me come across here. So yeah, it's sort of like drifting sideways. It's not as crazy as dollar yen. These highs still seem to be sort of acting as some sort of level of resistance. So it gives you something to focus on. If anything, I'm looking for where that natural support level is, and going back, there's not much around. So you know what? If anything, this is the start of the new support trend line for my liking. So I'll just whip that in there, and you come back to euro, right? So we've got that now that euro's bounced. It makes sense to move the support trend line lower, and this trend line, which is already in place, you can see how effective it's been at holding this move to the top side. So there's no reason to move that as well. Now sterling, it needs a refresh. Oops, if I can get the right one. And well, you know what? This is one of those situations where, so we got a trend line below here. I'll just delete that trend line because the one below is now the most relevant. And coming over to the Aussie and Kiwi, they're a bit of a mess, right? Just with their price action. This trend line's out of play. And with that slight move back up, I'm happy to sort of move the trend line over. And that'll be the same for the Kiwi. Now, the Kiwi, bit of the odd one out. Now, the government is talking about introducing some new taxes to curb the housing, the massive rise in the housing market. That's probably the most effective support line. You can see where that is. That's going to be important to us too, because if the way Kiwi has shut down on the release of these upcoming new taxes on housing to try and slow things down, it's a bit of a negative for the Kiwi. This level here will act as resistance on the way back up. So it's important you know exactly where that line should be. Otherwise, you're going to be potentially trading the wrong situation. So as you can see from these charts, there's not, it's not huge at the moment around what's going down. Now, the US Treasuries drifted off a touch. No big deal there, right? So I still like overall, I still like euro down. It's just it's one of those things that just it's entrenched in me at the moment. So the other pairs, it's all going to come down to what the dollar does, whereas euro seems to have an extra layer of weakness on top from the European sort of numbers, etc. So what we need to see is something defining in the US dollar. Now, the markets are very comfortable at the moment with the way the treasuries are moving around, right? So if you keep an eye on these treasury yields, if they go up and down, that's what the dollar's going to do. It's going to follow. If the yields go up, dollar's going to rally. If it falls, dollar's going to fall. What we can start to do is start to have a look through what's coming out this week and get a bit of a clearer picture. And ideally, you do this when you can plan out the week with the key releases, but just following what pairs, the key ones. Now, we've got some UK employment numbers. Okay, there's a raft of data here coming out, so check that out. That could give sterling some sort of short-term momentum. And then as you sort of scroll down, I've just gone through and added a bunch of things to the list here. We've got some Kiwi trade figures. There's a few obscure numbers out of Australia Wednesday. And then we start to get into some, this is where we, like a pair for me is euro. German and European data, I like it because it can potentially give it some sort of direction, especially if it comes in the same direction as it's currently going. UK CPI, well, that's a good one to have a look at. And then we've got some, starting to get some PMI numbers, some mortgage numbers out of the US, consumer confidence numbers out of Europe. So there's a bit more to play for, but we just got to wait. Now it's, as I said, it's Monday afternoon or Monday night in New York, coming into Tuesday in Asia. You know what? Just wait for the market to connect. We've got the charts. The good thing about the charts is, or most of these currency pairs, they have reconnected for us. There's no major glitches. There was that little gap in a few pairs revolving around this Chinese situation. And you've got to expect China to push back, right? So they've slowly dismantled global manufacturing over 20, 30 years. They've got the box seat as far as where everything's made. Now, the West is coming back with sanctions against human rights abuses and these sorts of things. The US, they've obviously got major trade issues. So we're going to see how that plays out. This is something that may impact the market a lot more than what it currently is. Aussie and Kiwi, two pairs to watch very closely there. Otherwise, it's business as usual. Okay, we're watching the dollar direction is coming from the US Treasuries. There's not much more to do except wait for the penny to drop, and that could be one of these data releases or just a central bank or a geopolitical release. And these are the major news items that are sort of whipping around, so make sure you check those out. But I can't see too much happening just at the moment. If anything, the equity indices are the main game right at the moment. And if you've got those US Treasury prices up, you could probably be either trading those or just trading the equities off the movements in the price of the US Treasuries. Makes good sense to me. All right, guys, that's it from me. Have a good trade day. All the very best. Cheerio.